And those who are struggling with the market structure, the video I have today is advanced market structure. So if you're struggling with market structure, don't forget to tune in on this video, watch it till end so that you learn something. So guys, let's get to the chart. I did a video on market structure, so if you haven't watched it, go on my videos so that you watch it. So guys, as you all know, there are 3 types of market trend. I did it on my last video. We have a bullish, a bearish, and a ranging one. So I'll be using a bullish and a bearish. So let's say price was moving to the upside, creating higher highs and higher lows, higher highs and higher lows, just like this, higher highs and higher lows. And at some point, market breaks structure and then changed trend, meaning we have a change of character somewhere. Yeah, so we are now moving to the downside, creating lower highs and lower lows. So as you can see, we were moving to the upside, meaning we are bullish. But then when price changed trend, we started moving to the downside, meaning we are bearish. So as market is moving to the upside, it's creating break of structures to the upside. So something you need to know is that in a bullish market trend, price breaks structure to the upside, and in a bearish one, it breaks structure to the downside. So these are break of structures, these ones here, these are break of structures. And then on the side of a bearish, these are also break of structures to the downside. So right here we have a change of character, meaning price has changed trend from bullish to bearish. And then there's something you need to know, guys. If price is moving to the upside like this and then retraced like this and then moved again, meaning it created a break of structure right here. Right here we have a break of structure, and a break of structure must have a key level that crossed it. So let's say there's break of structure down here, there's a, let me say, an order block. So that's an order block. So what we expect is that price to retrace to this order block, mitigate it, and then we target buy. So what you need to know is, after price breaking structure and a key level that crossed it, you wait for a retracement. This is just a retracement, this one here, this move to the downside, this is just a retracement or a pullback. You wait for a pullback or a retracement to that key zone or that key level before you enter. You place your buys or your sells. That's according to market trend. So if you're moving to the bullish like this, we wait for price to retrace to this key zone here and then we target buys. So what you need to know, you must wait for a retracement to that key level. Exactly. So that's what we'll be talking about. So guys, as you can see from here, price is moving to the upside, meaning we are bullish, and then it reached a point where price broke structure. We started moving to the bearish, and then again we started moving to the upside. So here we have a bullish, bearish, and again a bullish. So let's analyze it more. So from here, as you can see on this side, we were moving to the downside, meaning price changed trend from here. So from here we have a market shift or a change of character. It's just the same thing. So from there we have a market shift, And I told you guys you have to mark the key zone that caused that market shift or that break of structure, so that you wait for price to retrace to that key zone before you place your buys or your sells. And then as you can see guys, this market shift here had this order block, and as you can see, price retraced to that order block, mitigated it, and then we target buys. So from here you had to wait for a retracement here, then you place your entry. So after that we started seeing break of structures to the upside. That's a break of structure. This is a break of structure, and then a key level that caused it right here, also an order block. This is an order block, so you have to wait for a retracement to this order block before you place your entry. And as you can see, price didn't retrace, so we continue. Price continued creating multiple break of structures to the upside, meaning the trend is continuing. This is a break of structure and a key level that caused it right here, an order block. So this is an order block, and then at this point we had this last break of structure right here. That's a break of structure, and a key level that caused it is this order block right here, though it's not valid. As you can see, a valid order block must have a fair value gap, and as you can see, we have this order block here. Let me just show you. We have this order block here, though it's not valid because we don't have a fair value gap. So that's the last break of structure. There's also liquidity resting above this area. So guys, if you notice, that's a liquidity, not break of structure. So guys, if you notice the last break of structure, there's a high probability that price will change trend or the market will change trend. So we were bullish, meaning it will either consolidate or we change trend. So guys, as you can see, at this point here, we had some sort of consolidation here. So we had some sort of consolidation, meaning price was bullish, but it consolidated a little before moving to the downside or turning bearish. So that's consolidation, meaning it's creating equal highs and equal lows. So as you can see here we have a support level, because as you can see, price was trying to retrace to this order block, though with rejection. So there's this rejection, so that's support level. So after noticing the last break of structure, we knew price is going to change trend. So from that support level, there is no clear market shift, and then from here we had a clear market shift there. So that's a market shift, and then marking a break of an order block right here, because it's the one that had a clear fair value gap. So that's an order block, and as you can see guys, price retraced to this order block and then targeted sell. So from this side, because we were moving to the upside, we were buying. We were waiting for price to retrace to key levels and then we buy. But from this side, after we identified a market shift, we are now selling. We are now focusing on sales. We wait for price to pull back to key level and then we sell. So that's price retraced and then we sell. Another break of structure here. So after a market shift, price breaks structures to the downside or to the upside. That's according to market trend. So that's a break of structure. And a key level here, with a clear fair value gap, that's an order block. So price didn't retrace, but it's very valid. So moving down to the lowest, we continue having break of structures. There's also a break of structure right here. This is a break of structure, and also this is a break of structure. So marking the key levels, here we had this order block, and as you can see, price retraced to this order block before it targeted sells. Let's continue. There was another order block, break of structure right here. Because this order block is already mitigated, let's just reduce it, and then our key level order block here. So this is an order block. This is an order block. And then as you can see, price retraced, mitigated, though not 50%, but it mitigated fully the fair value gap below it. So price retraced, mitigated it, and then we targeted sales. On this one again, we had a small order block down here. So that's an order block, and as you can see, price retraced, mitigated it, though with rejection. You can see this rejection here, multiple. There's this one, another one right here, and another one. So price mitigated it, though with rejections, and then it sold a little. So this was the last break of structure here. This one, the last break of structure. And a key level that caused it. Right here, we had an order block. So this was initially an order block that we expected price to pull back, mitigate, and then we continue selling. But as you can see, price came, broke above, and then came back to retest, though with rejections, and then continued to the upside. So this order block here, because price violated it, it now turns to a breaker block. It's a violated order block. So identifying the last break of structure notifies us there's a high probability that price will change trend. So as you can see from here, we had our market shift, and then we had several break of structures to the downside. And then from here, we had another market shift to signal that the bearish trend has ended. We now focus on the bullish or a ranging market trend. So there we had a market shift, and then a key level down here, an order block that we were waiting for price to mitigate, and then we target buys. But as you can see, price consolidated right here because it was creating equal highs and equal lows. So from here we had this support zone here that hold price not to reach our key zone here. So we had a support level right there because as you can see, price tried to reach this level but it couldn't reach, so it was mitigating this support zone though with rejections. As you can see, there's that one, another one right here, another one here, another one. So there were multiple rejections, but it moved to the upside finally. So from there we started creating break of structures to the upside. So this is a break of structure, though it's not valid, but we just mark it, and then a key level that caused it, an order block below here, so after marking a key level, order block or fair value gap, we wait for price to retrace, and then we target buys because we are now moving to the upside. And then from here we also add another break of structure to the upside, and then a key zone that caused it, that we are waiting for price to mitigate, and then we target buys. So price moved, but finally it came to retest it, though with a rejection as you can see, but price finally moved to the upside. Because you're still bullish, there are still multiple break of structures. These are this break of structure here, and a key level that caused it. Let's see, there's this small order block here, there's this another one, but let's mark this one. So that's an order block that we are waiting for price to retrace to, and then we target buys. There's another break of structure up here, with a key level that caused it, another order block, unmitigated one. So it's a high probable area price will retrace to before we target buys. There is this last break of structure here, not actually last but we consider it as the last one because we are on the current price, market is still moving. So this is our last break of structure according to where price is. So on this last break of structure we have this key level here. So this is the recent break of structure and a key level, and as you can see guys, on these break of structures and a key level down here, there was no retracement or pullback to them, but as price moves it will surely return and retrace back. So from here, what you can do is to wait for a retracement here. As I've told you guys, always wait for a retracement to your key level before you target buys or sells. So that's according to market trend. So from here, we have to wait for a retracement. As you can see, price is still moving. Retracement here before you target buys. Yeah, so your entry will be somewhere here after price mitigates that level. Stop loss below that low, and then take profit. Liquidity above. Yeah, so something like that. So guys, as you can see, we started from this side. So let's see, we started here, and as you can see from here, price is moving to the upside, and it consolidated a little, gave us a market shift, meaning we have changed trend from bullish to bearish. And then again here we had the last break of structure, a bit of consolidation, and then it gave us our market shift. It consolidated a little, but finally it moved again to the upside. So we started moving to the bullish side. So guys, this is the current price. This is where price is. So I've told you guys to wait for a retracement before you target buys. Yeah, so I hope you guys heard all that. That's an advanced market structure. So guys, the next part of market structure, I'll be diving about market structure based on entries on the lower time frame. So guys, don't forget to tune in on my videos. Turn on the notification button so you don't miss any video I post, and then don't forget to subscribe. Thank you for watching, and bye.